Welcome to FXStreet. If you like what we're talking about, you'd like to be updated to our content on a regular basis, head on over to YouTube, hit that subscribe button, and you can follow me on Twitter individually at JustAnalysis1. Taking a look here at Cardano. Cardano, unless something really dramatic changes over the next six-ish days, Cardano is poised to complete a bearish run that it's never experienced before. And I know this data, for whatever reason, not pulling all the way back, but going back to Cardano's first traded date in September of 2017, it's never had a 5-month run of black or red candlesticks. It's never had a down drive like this before. And it's a pretty significant time cycle event. Really, if we measure it day-wise, this corrective move has existed for quite a while. Where are we at? Time measure. There we are. And we are getting into the end of this 144-day Gann cycle is an important one that often reverses. Gann said that 144 days in a trend often quickly and nearly instantly reverses a trend. So the threshold for that is within like 2 to 3 days. So there's roughly by Thursday, if it doesn't have a responsive buy, then that is invalidated. But from a price action perspective, the support here is kind of was kind of like a duh, no kidding. It's the $1 level at the 50% fib retracement, which is good that this finally occurred, because since it hit that new all-time high back in early September, it had not had its 50% retracement. And this is kind of a theme that goes along with a lot of cryptos, especially those in a lot of those in that DeFi space and those in the gaming token and metaverse space had not had a 50% retracement yet, but now they have. It's like the whole market needed to flush itself into equilibrium or even lower. So Cardano has hit that 50% zone, and it's looking pretty good here for at least a relief rally, which is really the kind of main story that we should all be looking at, is a relief rally to occur. So moving from, and man, if you measure the price range here, because last week, it's hard to forget, but last week it was trading at 162, and then to last week's, or just this week's low, I mean, that was a 44% drop. It's pretty substantial. And but the volume has started to come in a little bit more. It is still technically in a bull market in the RSI on the daily chart and the weekly chart, because it had the RSI hasn't dipped to tag 30. If it does hit 30, then it's into it gets into bear market level. But going back to here on the weekly, I want to take a look at the composite index. So the composite index recently hit new all-time lows in early December, and it started to trend higher. So we've got this false momentum drive south, basically. The composite index is warning us that there is positive momentum going into Bitcoin, or sorry, not Bitcoin, into Cardano, but the price action is not reflecting the sentiment or the actual input. So anyways, this is just a form of regular bullish divergence. The weekly chart is forming a fairly bullish reversal candlestick. But I will say, though, that from an Ichimoku perspective, it's very bearish. So Cardano, if it closed like it closed last week below the body of the candlestick, that fulfilled all the conditions needed for an ideal bearish Ichimoku breakout. The last time that happened for Cardano was back in 2019. I think March or May of 2019 was the last time that happened. So we'll have to see how this plays out. But if this is just a fake out south, then it's a pretty epic one. And upside potential here is likely limited to the top of the cloud around and the 382 fib retracement around that 132, 133 zone. And downside risks if I would say are at $1, but below that, the 78-cent level at the 618 fib retracement. But we'll update it and keep you informed. Thank you all for watching. Please don't forget to like, comment, and subscribe.